Let's get right to today's market action. We have Bernie Williams, USAA Investment Solutions Chief Investment Officer. He's going to tell us why now is the time to buy. A lot of investors agree with him. Chris Retzler, Needham Growth Fund co-manager, is going to give us 3 stock picks to add to your portfolio. And Larry Shover, the pits of the CME. Larry, since we got so much stock focus coming up, I want to start with oil, which is up over 2%. Is that all about Ukraine?
It could be part of it about Ukraine. We got a risk premium bounce for sure. Let's also keep in mind the dollar is lower. We have a little bit of a risk-on day today. U.S. dollar higher against most currencies. Rates are lower. But yeah, let's be clear about it that Russia definitely is creating this risk premium to oil.
Okay. That's all well and good, but we also need to get an update from you about what happened with the glitch in trading. I know it's over and Globex is trading again, but any clarity on what caused it?
There is no official clarity on what caused it at 12:45 Central Time, but let me tell you that once again, floor traders come to the rescue, and that's the beauty of the CME. Globex did not work for almost 2 hours. However, the grain markets did not skip a beat. We have an army of floor traders, market makers, what have you, to fill in the gap, to take care of all the orders in corn, wheat, soybeans, ethanol, you name it, we have it.
All right, Bernie Williams, tech making a recovery today, up almost, the NASDAQ up 80.81, almost a full percentage point. Were you buying tech today?
Yeah, it was. We bought several companies, one of which is NXP Semiconductors, which was off about 10% last couple days. But it's got great exposure to several industries, such as autos, industrials, and the Euro MasterCard Visa card, which has to do with security. And really, on next year earnings, it's looking very reasonably valued. So I think the drawdown in that company in the last couple of days was unwarranted.
Okay.
So
Forgive me for interrupting, but we do have breaking news from Alcoa, the earnings. Adam, go ahead.
Beat on earnings, David, 9 cents per share. The Street was expecting 5 cents per share. Revenue came right in line with expectations, $5.5 billion. And Alcoa continues to project 7% global aluminum demand growth in 2014. We're going to continue to crunch these numbers, David.
Okay, Liz, the interesting thing we mentioned before about Alcoa is that, in fact, once it got off the Dow, it popped up. The stock actually is up about 6% since then. There was a very big deal that they made with a truck deal, Ultra One truck wheel. They're getting into wheels now, and that is improving their business. Did very well on that front.
And auto bodies. I cannot remember the last time Alcoa beat on the earnings per share by this much. It has been a struggle for this company. In fact, because it's been so commoditized and aluminum prices had fallen, been a very tough business. They have closed plants over the past 2 to 5 years. But again, David, to have this beat of 9 cents a share compared to what was expected, 5 pennies a share, matching on revenue. This is great news for Alcoa, and we can see the stock is moving. Sorry, Austin, if you can just move slightly higher in both the bid and the ask from its close.
A little bit. Larry, what about Alcoa right now? It's interesting that despite the great news, the stock is not zooming ahead after hours. It's ahead a little bit, but not much.
Yeah, you're right. And keep in mind, it's rallied 60% on strategic alliances with Boeing, with Ford. Their production margin clearly has gone higher. But the big story with Alcoa is obviously aluminum. And aluminum prices, the premiums are very high. But beneath all that veneer, there's an amazing amount of inventory behind that the market recognizes. And also keep in mind, especially in the western provinces of China, they continue to smelt the metal. So the inventories continue to grow. It's tough to get at, but once they do, if the LME ever changes the rules for cash and carry trade, we'll see an enormous amount of inventory, making it a little bit harder for Alcoa to make money on aluminum alone.
Let me just give some clarity, and Bernie, you can chime in here, because I know that you're picking names that are industrial names like Schlumberger and Eaton, but looking at Alcoa, they are saying that aerospace is going to look better than they had anticipated, not by much, by about 1%, but aerospace looking good. What does this say about industrial names out there for the pickings?
Well, I think it is positive, and though we don't cover Alcoa right now, one question I would look at in their conference call is what's the impact of them gearing up for the Ford F-150 transition, which they're going to start using quite a bit of aluminum in trucks.
Yeah.
That may be a reason for their higher inventory.
Okay, Chris Retzler, let me go to you. It seems like a little bit of a jump here, but the Federal Reserve is concerned about what's happening with growth. They did seem to be a little more pessimistic than a lot of traders in their last report. Whenever we hear them come out and talk, they're not that booming about what's happening with the economy. In fact, suggesting that the growth will come down a little bit from what was earlier forecast. With that in mind, is it possible for this market to continue to go up the way it has been earlier in the year?
No, I think we've been through a very nice, healthy correction. The year-to-date numbers may not be what everybody wants, but I'd like to look back 3 years, and the markets have done very well. So we think that the first quarter clearly was difficult with weather. Alcoa certainly, hopefully, is a good indication of a better earnings season. But I'm going to be looking more at the second and third quarter guidance here during the earnings season that really kicks in next week. And we think that it should be a better second half than first half, and that should benefit a lot of companies.
Chris, you like Cerner, you like KVH, you like CarMax. CarMax is an interesting one. I mean, obviously, the auto industry has certainly come back, but what's at the heart of your picking here?
Well, on CarMax, they were impacted by weather here just recently. They had a difficult quarter. We think it's just a well-managed company. They're reaching out to a whole variety of customers with their subprime lending, and we think that they'll see better times in the second half. KVHI, we think, is a great maritime play on broadband distribution. It's a small cap company, flies under the radar screen, but it's a great secular growth story. And the other name you mentioned, Cerner, we're still big fans of driving costs out of the healthcare system, and medical record keeping, which Cerner's a preeminent leader in, is going to continue to help that modernization.
Bernie, I read in your notes that 45% of your equity holdings are overseas. Now, I thought that was a mistype. If that's right, why?
Well, we're a globally diversified investment company. We build balanced portfolios and look for assets across the world. So 45%, if you look at the market cap of all the world's assets, isn't clearly out of bounds. But more importantly, when you look at emerging markets in Europe, you're seeing better valuations. And clearly in the case of emerging markets, you're seeing much higher growth, even though it has come down somewhat.
Larry, we're showing a flash on the bottom that says gold hits highest close in 2 weeks. Gold looked good today, but so did the soft commodities, wheat, oats, corn, albeit we had the problem with the glitch, but all of those names look better. Is the great commodity sell-off over, and are we back into a different rotation back into these areas?
I would say no. I'd say what we're going to see in 2014 and beyond is more of a divergence in commodity prices. It's not going to be like we've seen before, where the dollar goes lower and all commodities suddenly go higher. We're starting to see, other than today, a little bit more divergence, and we're seeing that especially in industrial metals. I mean, we've seen nickel outperform iron ore. That not supposed to happen. And then we have copper and aluminum falling other than today. Gold is definitely a technical bounce. So I think it's going to be a lot harder to buy or to trade commodities because they're going to start trading on their own fundamentals and not on quantitative easing.
Good stuff, Larry. Thank you.
Bernie Williams, Chris Retzler, our thanks to you. And again, Larry, we'll check back in when we get the futures numbers.
Get an idea. Let's go back to Larry Shover, the pits of the CMA. How's it shaping up for tomorrow, Larry?
Well, right now, let me encourage you to think that yesterday's low was a 3% peak-to-trough move in the S&P 500. It's a lot like a rerun of late January when we had a 6% peak-to-trough move based on emerging markets. The only difference of this rerun is that now it's momentum stocks. People were wholesale selling biotech, internet, cloud computing, etc. The nerves around here are on edge because right now people are saying, will we have that sprawl? Last Friday, people thought it was prerogative that we were going to hit 1900. Now they're saying, well, we have to get down to 1780 to get this consolidation complete. So don't listen to the noise. Just continue to keep holding on, keep diversified, and realize that we're in better shape than what you're hearing.
Larry, terrific stuff today. Thank you very much. Larry Shover from the CME. Liz?
Yes, and we love our floor traders. Yes, yes.